Hello, it's ChewDog chart. Now, a few weeks ago, General Electric looked like a good speculative stock for a number of reasons. It closed on October 5th at $24.25 a share. Today, October 30th, it closed at $20.41 a share. Investors are now saying that GE shares are entering a death cross. Now, with October 31st, Halloween, coming tomorrow, that's a pretty scary prospect. So what exactly is a death cross? Let's take a look. According to Investopedia, the death cross can occur in individual stocks within various funds and when examining indices and averages. Considered a bearish signal within the market, a death cross occurs when the short-term 50-day moving average, also called a price trend, crosses below the long-term 200-day moving average. It is named a death cross due to the X shape it makes when the trend is charted and is often considered a sign of further losses for a particular stock. The death cross is seen as a decline in short-term momentum and can result in further losses as investors move away from the particular investment vehicle involved. However, it is not a guarantee of further losses as other market forces can override the fears relating to the trend. Further, a death cross is generally seen as temporary when examined in long term. The significance is generally a death cross is related to recent changes in trading volume. The higher the trading volume, the more meaningful the death cross is said to be, and vice versa. While some consider this movement as a foreshadowing of changing market trends, others believe it better represents trend changes that have already occurred and may not be indicative of future potential. So with regard to General Electric and a death cross, we can see over here on the right side of the chart that the 50 EMA is about to cross down under and through the 200 EMA. The 50 EMA is the golden or orange color, and the 200 EMA is the pinkish color. So here's the 50A dropping down, and then the 200 EMA is coming through like this. So hence the death cross. Now the definition that I read to you was based on a 50-day moving average and a 200-day moving average. Recent articles about General Electric have been based on a 50-week and 200-week moving average. So it depends upon who you're talking to on what method is used, daily or weekly. I like using the monthly chart. The chart that I showed you earlier was a 20-year weekly chart on General Electric, and now we have the 20-year monthly chart. But for purposes of this description, it's pretty similar. And we can see that the 20 EMA is about to cross through the 50 EMA, which is approximate to the timing on the previous chart. And we see that occurring potentially right here. If we go back in time, we see that another cross occurred in early 2008 at this time frame, and then previous to that, a cross occurred in, say, early mid 2002. Now, investors would be paying attention to that and seeing that. However, if you take a look further down here at the MACD, you can see that on a MACD, which I like to use quite a bit, you see that the fast line crossed through the trigger line at this point here. And if you go back, we had another cross through actually here in 2005 2014, and then across through here in late 2007, early 2008, also here in 2005, and back here in late 2000. So if you compare these crossovers on the MACD to the so-called death crosses, you see that in almost each case, an investor would have had prior knowledge of the event coming up with regard to a death cross. So the importance of a death cross, in my mind, is not as significant as if you're looking at other oscillators, moving averages, and other indications. So let's go look at a couple of other stocks that have death crosses. Two other stocks that showed death crosses were Chesapeake Energy and Qualcomm. Now, using my non-traditional definition of a death cross with regard to a 20 EMA and a 50 EMA, we can see that the latest crossover was here in late 2014. Now, if you go down and look at the MACD, you can see that here was a crossover which occurred slightly prior to the EMA crossover. If you continue on down, say into the relative strength, you find a peak here and then the decline at this point, and the decline beginning prior to the crossover. Same thing for the stochastic. We see the stochastic fast line moving down through at this point and continuation onward, again, this occurring prior to the EMA crossover. Moving through the volume, we can see that the volume was increasing, which is another notable factor. Moving on down into the Williams, and we see that the Williams declined beginning here in mid-2014. All of those occurring prior to the actual crossover of the EMAs. Now let's go ahead and take a look at Qualcomm. QCOM is the symbol and the reset of the chart. And again, using my non-traditional definition of the EMAs, we see that a crossover, actually, at this point in time, it reflected down, but I think if you use a more traditional definition of the death cross, it may have occurred at this point in here, but certainly at this point here. Moving down into the MACD, you can see that the MACD came through the fast line, through the trigger line, much earlier in, say, mid-2004, so you would have had plenty of advanced notice on that. Continuing on down, and we can see that the other indications showed the same, the fall off in the RSI as well as in the stochastic, and I think we'll find the same in the Williams, which we do, falling off at this point in here. So now, with regard to, say, Qualcomm, I find that it bounced off of the 200 EMA in my chart and came up through the 20 and 50 EMAs, topped out here, and then began another decline, but it looks like it's staying away from the 200 EMA at this point. So for me, some of these so-called death crosses aren't necessarily a reason to stay away from a stock. When I hear about a death cross, I put that stock on my watch list. So let's go back now to General Electric and see what potentially is happening there. Using the reset, coming down, we certainly had a sell-off in the last couple of weeks or so here to today's close 2041. And we come down and we see that the MACD seems to be accelerating. The acceleration can be seen in the gap becoming wider between the fast line and the trigger line. And that is also shown up in the histogram where it continues to show that disparity. The relative strength is in a free fall at this point. It did bottom out here in 2009, so you might want to be looking for a bottoming out at some point here relatively soon. And in the stochastic has not yet hit bottom either, but we'll be looking to see if the fast line comes down here and starts to trend maybe sideways, maybe does some sawtoothing like it did in this period here. Also in this period here. So for now, there's no real reason to be buying General Electric, but it might be on your list for the future. We'll see what happens. Recently, General Electric indicated that the company would be interested to sell the locomotive division, something that accounts for about 4% of revenues. There are multiple other assets that can be monetized. So depending upon how General Electric wants to restructure, it is something, a stock that one may want to pay attention to. For now, that's ChewDog Charts. Thank you.